morning and welcome to our workshop week starting the 12th of August. Well into the holiday month of August, although as we all know there are a lot of potential moves in August. We had a lot of defining moves over the last few years that often culminated or originated in August, so plenty of opportunity out there. Last week, fairly typical of an August week really. FTSE was off 60 odd points, about 1%. Standard & Poor's pretty much the same, really, off 18 points on the S&P 500. That's down just over 1%. On the currency front, the euro continued to advance a little bit further against the dollar, up about 60 pips, just under 0.5%. Cable or sterling, that was the real story of the week last week, with sterling significantly higher on the crosses against the dollar. That's cable 220 points to the good, and the yen, that rallied against the US dollar as well, about 270 points, obviously about 2.7%. Gold, that was unchanged on the week, although it fell quite sharply at the beginning, then rallied sharply towards the end, ending up, flat on the week, but the flat didn't quite tell you exactly what happened there, of course. Crude oil, no further news, no ructions, any further ructions anywhere in the Middle East, slipping about 70 cents, about 0.6% there. But the big story last week was definitely Mark Carney and the press conference last week and the announcement of this forward guidance on interest rates. Market reaction was interesting, really. The rally suggests on the surface that the market does not actually believe that rates will stay low for that length of time, and I have to say, I'd probably agree with that. It's a long shot, a long call, and the fact that this guidance is only just that, I think a lot of people are in danger of putting too much faith in this so-called guidance. Equities struggled a bit last week as the summer sort of holiday impacts the market a bit, liquidity and volatility wise. Although VIX was quite interesting, we hit a low of 11.83 and the market has spiked then, and I think traders sense a move brewing, possibly. But anyway, without further ado, let's just have a quick look at the data coming out this week. We started the week with the prelim flash GDP number from Japan, which actually disappointed. And for those of you who are trading overnight, you'll know how much weaker the yen is overnight. Certainly the yen on the crosses moved quite sharply lower against the dollar and the euro. Rest of the week, well, a lot of it still coming out from the UK. We've got the CPI data tomorrow and our PPI input data. The input data actually is sort of forward-looking to the extent that that's what feeds then through to inflation. But inflation, our CPI data, sort of bobbing between sort of 2.4, 2.9, expected to drop a little bit from that 2-point number posted last month to 2.8. We then have the diffusion index from Germany, the ZEW sentiment indicator. Anything above 0 is positive, so very positive number there. Data, in fact, in the Eurozone has been improving markedly, whilst data seems to be missing consensus in the States. But 40.3 is the number slated for the ZEW. That comes out at 10 o'clock tomorrow. And then one of two important bits of data in the States, core retail sales, expected plus 0.4 core, excluding the more volatile food component. So that's the bit that we watch. Unemployment in the UK tomorrow, that's Wednesday, in fact, 9:30. Sort of slightly deteriorating picture. I think the feeling is perhaps we might start to see unemployment climb a little bit. Something that doesn't seem to get the attention of Forex Factory, but the flash or prelim GDP numbers from France and Germany are just as important as Japan. Why they don't get a high impact rating, I'm not sure, but things have been picking up in the States, in the Eurozone, so it'd be very important to see how France and Germany fared as we get their first reading of the second quarter GDP. We then jump to, Wednesday PPI, that's not such an important number, but really the more important numbers for the rest of the week are retail sales in the UK on Thursday, obviously important to us and sterling and the FTSE. We then have the CPI data in the US and the weekly unemployment claims, which are obviously important. And then our most important number for the week really in the US, there's not a lot of data out really in the US, is the Philly Fed Manufacturing Index. The Philadelphia Federal District has got a lot of manufacturing. It's key to where manufacturing is going. We got a number slated to be weaker than the previous at 15.6 as there is a feeling that the numbers are starting to sort of slow down a little bit, which is making it even more difficult to work out whether tapering is going to happen in September. And then on Friday, building permits and housing starts, but also key University of Michigan consumer sentiment indicator that comes out at 523, a very forward-looking indicator in a way. The health of the consumer is very, very important as to whether they're feeling confident about their jobs, interest rates, the stock market, etc., which leads through to consumer spending, which is what drives companies' profits, etc. So that's the week. Good luck with the rest of the week. We do reconvene again on Thursday to have a run through of the data to then, and speak to you then. Thanks for listening. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.